Okay, so you have a 590 credit score and you need a personal loan. Maybe it's for medical bills, car repairs, or just to consolidate some debt. So you go to your bank. They say no. You try another lender. No. And now you're wondering if anyone will even touch your application. Here's the thing. A 590 score does not automatically disqualify you from getting a personal loan. But the way you apply matters more than you think. That's exactly what we're covering today. What a 590 score actually means to lenders, which specific lenders will realistically work with scores between 560 and 620, and the one step most people skip, which could be the difference between getting approved and making your score even worse in the process. But before we get into it, if you find this video useful, hit the like button and subscribe. I put out new videos every week breaking down real financial situations that the big banks would rather you not understand. Okay, let's get into it. First, let's talk about what a 590 score actually is, because most people misunderstand their own number. According to FICO, a score between 580 and 669 is classified as fair credit. Not bad, not good. It's the limbo zone, and roughly 17% of Americans sit right here. Now here's what most people don't realize. Your credit score is just one of 5 things lenders actually evaluate. The score opens the door, but it doesn't decide whether you walk through it. What actually determines your approval comes down to 5 factors: your debt-to-income ratio, your employment history, how long you've had credit, your recent payment history, and how many hard inquiries you've had in the last 12 months. A 590 score with stable income and a low debt load looks very different to a lender than a 590 score with 3 missed payments and 4 recent credit applications. Let's break this down, because this is where most people go wrong. Your debt-to-income ratio, or DTI, is probably the most important factor after your score. This is the percentage of your monthly income that goes toward debt payments. If you make $4,000 a month and you're already paying $1,600 in debt, that's a 40% DTI. Most lenders for fair credit want to see this below 35 to 40%. If yours is above that, it doesn't matter what your score is, you're going to struggle to get approved. The second thing lenders look at is income stability. A W-2 employee with 2 years at the same job is going to get approved over a freelancer making the same money, almost every time. That's just how underwriting works right now. Third, and this one surprises people, is your recent payment history, not just your overall history. If you had a rough patch 2 years ago, but you've been perfect for the last 18 months, certain lenders will actually weight that recent positive history more heavily. They want to know who you are now, not who you were in 2022. And fourth, hard inquiries. Every time you formally apply for credit, your score drops between 5 and 10 points. If you've applied to 4 lenders in the last 60 days, hoping someone says yes, you may have actually made your situation worse. This is why the order in which you do things matters enormously. Okay, so now let's talk about who will actually work with you. Traditional banks, Chase, Wells Fargo, Bank of America, are largely off the table at 590. They typically want scores above 660 to 680 for personal loans. Not impossible if you already have a relationship with them, but don't apply cold. Credit unions are your first real option. They're member-owned, and they consistently offer better terms to people with fair credit than traditional banks do. If you're not already a member, look into federal credit unions in your area. Many allow anyone to join for a small fee. Online lenders are your second option, and this is honestly where most people in the 560 to 620 range are going to land. Lenders like Avant, Lending Point, Upgrade, and One Main Financial specifically work with fair to bad credit. Rates are higher. You're looking at anywhere from 18 to 35% APR. But they exist for exactly this situation. The third option is a secured personal loan. Instead of your creditworthiness being the collateral, you put up a savings account or a CD. Some banks and credit unions offer this, and approval rates are significantly higher because the lender's risk is lower. And finally, a cosigner. If you have a family member or close friend with good credit who's willing to cosign, many lenders will approve you based largely on their credit profile. Just make sure everyone understands the risk involved. Here's the most important thing I want you to take away from this video, and this is what most people skip. Before you formally apply anywhere, use pre-qualification. Almost every major online lender now offers a pre-qualification tool that uses a soft credit pull, meaning it does not affect your credit score. You fill out your basic information, your income, the loan amount, and they show you estimated rates and whether you're likely to be approved. Zero impact on your score. This means you can check your odds at Avant, Upgrade, and Lending Point simultaneously without triggering a single hard inquiry. Then, once you know who's actually going to approve you and at what rate, you make one formal application, one hard pull instead of 4 or 5. That difference can mean 20 to 40 points on your score that you don't lose unnecessarily. So here's the actual approach. Step 1. Check your DTI before you do anything else. If it's above 40%, consider whether you can pay down any existing balances first, even a small amount. Step 2. Use pre-qualification tools on 2 or 3 lenders simultaneously. Compare APR, loan terms, and origination fees. All 3 matter. Step 3. Apply to your best option only, not 3 places. 1. And if you get rejected, ask why. Lenders are required to tell you. That feedback is valuable. Maybe it's your DTI, maybe it's a specific derogatory mark. Whatever it is, you now know exactly what to fix before you apply again in 90 days. A 590 score is not a life sentence. It's just a starting point. If this helped you, subscribe. I break down real money situations like this every single week. Drop your question in the comments, I read all of them. And if you want to know exactly how to raise your credit score fast, that video is right here. See you next week.